My name is Ainaa Aliaa binti Muhammad ZUNAIDI and my matric number is 2021481372. In this slide, I will talk about introduction. What is Fintech? Fintech or financial technology is software that combines cutting-edge technology and solutions for financial services and goods. Fintech has lately transformed the traditional banking and financial services industry. Fintech also is a rapidly expanding sector that assists businesses in exploring options such as productivity development, cost reduction, innovation, and risk management. In this slide, I will talk about why Fintech is important. There are more reasons why Fintech is becoming more essential. So here, there are 3 important Fintech. Firstly, Fintech revolution contributes to the development of more prosperous economy. Fintech has developed and transformed the financial industry in an unprecedented way. It should not be overlooked that many financial institutions are converting from manual to digital methods with the help of financial planning software. Secondly, low-cost alternative. When comparing Fintech and traditional banking, it is often note that Fintech organizations provide the best services at the lowest feasible cost. It is because there are no physical branches. Some banks let you keep more cash in your wallet by waiving the fees for opening a bank account. The third one is transparency. It was planned and executed by the seller. Suppliers all throughout the world have set several new criteria. Aside from just transferring or receiving funds, everyone is kept in loop with total transparency. It's a win-win situation for the banking industry and their devoted customers. So now, let's move to the effect of Fintech in Malaysia. Development in Malaysia Fintech are changing the landscape of the country's financial sector. This is because there are various positive impacts with the development of Fintech. Firstly, making financing more affordable available. Fintech innovation provide fresh solutions to long-standing problems. It's lead to a more accessible and transparent financial system, notable for agents group, as well as making it more efficient for businesses to supply financial services. Next is cutting-edge technology and convenient solutions. Fintech solutions allow vast segments of consumers who previously would not have been able to transact with them to do so. For example, a collaboration between Boost, cross-border payment infrastructure, and an AI-powered microfinance firm to give tailored financial solutions to underserved communities in the region. Meanwhile, there are also negative effects of Fintech. Firstly, regulatory framework. Authorities may find it challenging to keep up with technological advances due to the rapid rise of Fintech. This might result in regulatory gaps, unethical practices, or poor consumer protections. Secondly, over-reliance on technology creates operational risk. Excessive dependence on technology can put the financial system at risk of failure. Technical interruption, systems failure, and cyber attacks, for example, can all disrupt services and undermine customers' faith in digital banking system. Last but not least, the security concerns. The rising reliance on digital banking channels generates new security risks. For example, data breaches and hacking attempts can harm an individual's personal and financial information. We move on to the example of Fintech in Malaysia. First, Boost. Boost is a market pioneer in Malaysia's e-wallet business. Axiata's comprehensive Fintech subsidiary, Boost operates in 7 Southeast Asian nations. Boost harnesses the power of technology and artificial intelligence AI inside its expanding financial ecosystem to empower millions of users. Secondly, iPay88. iPay88 was an early pioneer in Malaysia's online payment gateway markets. It provides businesses with the tools and infrastructure they need to safely conduct electronic transactions, allowing them to speed up payment processes and enhance the overall user experience. Lastly, BitPay. BitPay wants to be known as a banking choice rather than an e-wallet. It also includes a well-designed budgeting tools and a prepaid MasterCard that can be loaded and used at any merchants that accepts MasterCard globally. Initiative taken by Islamic financial institutions in Malaysia. Malaysian Islamic financial institutions have been investigating and implementing Fintech concept vigorously in order to improve their services, increase efficiency, and remain competitive. Bank Islam Malaysia Berhad is the Islamic banking institution that I have chosen in Malaysia. Bank Islam Malaysia Berhad is Malaysian and Southeast Asia first Sharia-compliant financial institutions. There are various Fintech initiatives that have been taken by Bank Islam Malaysia Berhad. Firstly, fully cloud-native digital banking platform or BU. BU represents a game changer for Islamic banks and the Islamic financial industry. This innovative banking application allows users to do financial transactions without having to visit a branch. Customers of BU would benefit from the app's agility and will have access to a curated, user-friendly and personalized banking experience. Secondly, partnership with fintech companies. With this collaboration, it can expand the range and quality of Islamic financial products by utilizing innovative technology such as robo-advisor, AI-driven services, or blockchain application. Bank Islam Malaysia Berhad has joined forces with the UK Islamic fintech Castrol. Castrol will go beyond its consumer apps offering and develop a software as a service offering in the aim of partnering with more Islamic banks eager to digitally modernize. Another initiative that have been taken by Bank Islam Malaysia Berhad is facilitate cashless transaction, deploy mobile wallet application and payment options. Bank Islam Malaysia Berhad, in collaboration with KeeperPay, has launched a university e-payment chips. KeeperPay also begin by introducing a new payment channel for Bank Islam via QR, as well as the option to make mobile reloads and in-apps marketing to consumers. Okay, now I want to talk about cyber security. Because of advancement in digital communication, Islamic banks are increasingly becoming the target of cyber attacks, resulting in a growing demand for cyber security enhancements. The study of techniques to safeguard devices and services against malicious entities such as hackers, spammers, and cyber criminals to known as cyber security. Although several cybersecurity aspects stress proactive measures, current specialists are mostly concerned with establishing successful strategies for securing a wide range of assets from computers and mobile phones to network and a database against potential attack. So now, this is the cybersecurity that have been taken by Bank Islam Malaysia Berhad. Firstly, Go Secure. It is a digital authentication system that uses safe verification to validate transactions initiated through online banking. This function has taken the position of the iAccess code service, which was delivered via SMS to the customer's registered mobile phones. Next is Bank Islam Malaysia Berhad cybersecurities include a kill switch capability. The new security feature also automatically blocks all outgoing transactions from customers' Bank Islam debit iCards by pressing the kill switch button on the main side of the Bank Islam Internet Banking homepage. Last but not least, the bank will also introduce a 12-hour cooling off time for each new application. Its primary objective is to safeguard users' accounts from fraudulent individuals attempting to engage with the authorizations. These cooling off periods allow customers additionally time to respond correctly when they get push notifications or emails regarding changes to their accounts. In conclusion, Fintech is a revolution in the financial services sector. It is best described as the disruption of existing financial and banking practice by the new technologies and concepts that can help customers manage their money and effectively and save their times. Meanwhile, for the Islamic Fintech business has the potential to expand further in the next year, aided by Malaysian intensive ecosystem. This is due to the fact that Islamic finance is the backbone of economic recovery and the expansion of the consumer sector, which is the leader in transformation.